Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look at the gold market. You can see that yesterday performance was not very significant. Market has moved slightly lower, but it was not as strong as a couple of days ago. At the same time, it seems that this action is not over yet, just because the market stands at a strong support area. It doesn't show any significant upward reaction. So it means that the current retracement hardly will be very short term, so we probably should get some progress here. And this is a type of the situation where actually we should not make any drastic steps. So currently the patience is our friend by many factors, many reasons. First is European Central Bank meeting that could make impact in general on the gold market as well. For instance, if you are watching for money flow between the ETFs, precious metals ETFs, you could see that the major inflow currently stands in the European Union. Major outflow stands in United States in the largest funds, such as SPDR. So we talked about this in the weekly report. And since the major inflow in gold stands in the European Union, and well, it's changing of the policy that also could make impact on these flows. This is a first moment. It's of course will be a bit longer term effect on the market, but still this is the subject that we also need to keep in mind. Second moment, beyond of the European Central Bank, currently we have some global issue, it seems, on all markets across the board, and it seems that the drop in the cryptocurrencies, decline in gold, this might be the steps of the same chain. Because our forum member yesterday, the virus, has put the post that with the interview of the economist suggesting that it might be the liquidity issue. So we saw it previously. So when the market starts to reshape its portfolios, and they would like to invest in some definite assets, they contract the exposure in other assets. And previously this type of assets was the Bitcoin, when we have some drastic changes in the Fed statement, and it obviously the stock market will keep going, everybody selling the cryptos and put the money in the stock market. So cryptos were treating like the source for investing and reserve object for investing when the major assets provide less return or not very attractive for investing. So this is a type of the emerging market. So everything is bad in the developed market, everybody put money in the emerging market. When the developed market starts to improve, everybody withdraw the money from the emerging markets and put them in the developed. So this is the issue that we have currently, and that explains why this retracement might be a bit deeper. So if this is some extraction of the funds from the cryptocurrency, from the gold, it could well, it seems that it's not over yet. So we're currently in taking in consideration all the stuff that stands currently in the fundamental picture, so it will be better to see what will happen. On the 4 time frame chart, market gradually is coming to the minimum target of the 3 drive pattern. To be honest, guys, we actually mostly it has been completed, because you can see the difference between this loss and that loss, and it's very small. But still, the one thing that makes me think that we could get another downward action here is that, take a look, market is not hurry up with the upward reversal and forming something showing the rebounds. So just flat standing with some downside pressure exists here, It stands right now at the nearest 790 target, the Fib level. But I still think that chances that we will see price in our major support area of the 1762, 1777 currently looks significant, relatively high. So I think that it makes sense to wait, especially with all this fundamental stuff that we have currently on the back. On the lower time frame hourly chart, you could see that no chance to show any pullback yesterday has happened. So market has shown very small reaction on the support area that was in this area, this level. So discussed recently, and shows additional drop lower. So here is 1618 extension of the butterfly. Also, mostly has been completed. Just a few cents you can see still this target. But as I said, you could see some pressure exist here with the price action. Market is forming some wedge pattern that doesn't exclude possible another leg down, where market could appear to be in this support area. So even from the technical point of view, to consider long entry if you would like to buy gold in this area, it's much safer than do it right now, because this will be a confluence that is harmonic bottom to potential head and shoulders. So it will be relatively safe, at least in the first touch of this area. It's a really big chance stands for possible minor bounce up from it. That lets you to protect your position. At the current moment, with the common important fundamental events, I wouldn't consider taking a long position by far.